Trade is not that important to America. Its economy is not dependent on exports. Lots of noise is being made about this trade war with the US, but the exciting part is that the US has already won the trade war against China. Furthermore, it will also win the trade war against the EU, and the simple reason for this is that the US is not an export-based economy. On the other hand, China and Germany would get hammered if their exports took a big hit. Torsten Sluck, a chief international economist at Deutsche Bank, seems to concur with this outlook. The point is that trade is not important for the US economy. However, it is very important for Europe and Asia, and Sluck stated in an email to Yahoo Finance. Growth in the US depends more on domestic consumer spending and domestic capex spending than on exports, stated Sluck, whereas for countries such as Germany, exports are a very important driver of GDP growth. The chart below indicates that exports make up only 10% of US GDP, but in the exports account only for a small part of the US GDP. This limited exposure is due to our sizable domestic consumer market and the fact that we are blessed with a plethora of natural resources. This gives the Trump administration a lot of room to maneuver. Throw in the fact that the US dollar is the world's reserve currency, and there is almost no way that China, or for that matter the EU, can win a trade war with the US. Germany is going to be the first one to buckle over and come to the table, but the outlook for China is far from bright. The longer China holds out, the harsher the punishments dished out by the Trump administration will be. Markets are forward-looking beasts, and Chinese markets have all but agreed that China had lost the trade war. The Shanghai Index is plunging, the yuan has lost a significant portion of its value, and now the Shanghai Index is likely to trade as low as 2,400 with a possible overshoot to the 2,000 ranges before the dust settles down, and the longer China holds out the greater this fallout will be. Finally, take a look at the US stock market. It's holding up remarkably well, and after this period of consolidation is over, we expect this bull market to soar higher. We are going to look at the Nasdaq. It's in a solid uptrend and is more likely to test the 10,000 range. While there is a chance that the Nasdaq could test the 5,000 to 5,500 ranges before blasting up to 10K, the odds are low, and if it does come to pass, we would view it as a splendid buying opportunity. Overall, the outlook is bullish for the US stock market, which indicates that the markets are not worried about the consequence of trade war on the US